What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, the focus is on a video recommended by one of my followers here on YouTube, XPeng versus Tesla. Pros, cons, things we notice, things I like, things I don't like, and seeing is there one that has more value play than the other. So if you are excited for today's video, make sure you like the video, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. Now, we're going to get right into this video here. And again, first of all, this Inside EV News website posted this article here comparing to. So I'm going to use that as more of a way to start it off. And then after that, we'll jump into the financial side of things here as a company overall, looking at how they're doing overall, and then using that to kind of create this kind of perspective of which one could possibly be better. So we're starting off by saying XPeng is running Tesla's playbook for world domination. It may just work. So what this is referring to, before we get anything else, is that we all know that Tesla has been talking about, their robot Optimus and how much has come along. And then XPeng comes out and drops their own robot that looked so much more realistic and had a lot more movement to it. And people were in awe that, XPeng was dropping this robot as well. They do have EVs just like Tesla does. And again, Tesla's not moving away, but is building up more than just an EV electric vehicle brand here. They're actually, want to go into robotics and then use robotics and then do, to work in manufacturing warehouses, to work, different jobs and stuff like that for people to help maximize employment, all that kind of stuff. And XPeng seems they're doing the same thing. They're also coming out with a robot as well as also being an electric car company as well. So it's very, very interesting. But listen to this, though. So the robot is hard to ignore. Its unmistakably female form stands out with its nearly uncanny proportions and realistic Model-esque gait. The 5'4"-ish iron robot's appearance and walk were so convincing to the public that journalists and influencers inside and out of China were convinced that rising automaker XPeng hired a woman to wear a cosplay-esque morph suit and robotically do a supermodel walk across the stage of its new auditorium. And this is kind of what it looks like here. If you ever go online and actually watch the video of it, people were all thinking this is fake. There's no way this is real. There's no way this is real. It moved so much more. It had much more fluidity compared to Optimus from Tesla's first appearance. And so it's very interesting to see, who's ahead of the game, who can get robots out, who can monetize from it, who can make some money from it. And that's kind of the big thing. I don't know if that's an ad. Never mind. I don't know if the video put in here or not, but this is kind of what they had as at their presentation here. So that was very, very much cool. So again, kind of what is XPeng as a company here? So there are a lot of Chinese EV companies. Again, like BYD is another one that's very, very popular. So I'm not going to hold it against you if you've never heard of XPeng. The brand calls itself a tech startup, although at 11 years old and more than 1 million vehicles produced. It is well beyond a startup here. And this is kind of what their cars look like. Their cars look kind of sick. I'm not going to lie. I'm kind of hyped about those. There's no one here. The brand sells a full line of tech-forward EVs and now plug-in hybrids and extended-range EV models as of this year, which again is very, very nice. Not just EVs, but the hybrids, so that way people still can go to the pump and get gas. But they also have, those hybrids as well, along with just going full EV. All of them fall into a sort of near-premium-ish space in China. Is directly analogous to Tesla's market position, with refinement and a focus on technical gadgetry rather than outright luxury. Famously, a former Tesla engineer, there's a lawsuit that happened. Okay, yep, okay, whatever. I don't care about that as much. This is what's really important, though, I like, actually. The XPeng's roughly $18,000 Mona MO3 sedan showed up. In a little over a year, XPeng has sold over 200,000 examples of that car and has plans for the model to enter other markets outside of China. That's a huge thing in and of itself, because I know Tesla for a long time has been trying to push out a cheaper vehicle that you can afford. And I want to feel like there was like 25,000, maybe 30,000 as like their cheapest Tesla you can get right now. So the fact that XPeng has one that's $18,000 definitely kind of cuts that market there, because if you can buy a brand new electric vehicle for 18 grand, now obviously if it comes over to the US, it might cost a little bit more because of, import fees and all that kind of stuff like that. But still, even if the XPeng is able to make a cheaper EV car than Tesla is, that's their kind of competition right there, which I think is very, very nice. And again, making it a affordable car, right? And that's kind of what a lot of people like right now these days is an affordable car. The average car price in the US right now is, I think, a minimum like $40,000 for a brand new car. So if XPeng is able to branch these cars over to different markets, that would be very huge, and that could definitely help the car market overall, and it makes more competition, but it'll be good because they could definitely get some good sales here as a result of it. Recently unveiled a max version of the Mona MO3, which adds XPeng's level 2 assisted driving features at the time not so common in such an affordable car. And, the big thing with Tesla is the FSD, the software behind it, all that kind of stuff that, these cars don't really have as much. The other EV vehicle companies don't have as much software like Tesla does here. But it's semi-autonomous, not fully autonomous like Tesla cars are. And again, Tesla's branching out into robotaxis to then have them be, fully self-driving taxis in major cities, which is a huge, branch out as well. And XPeng probably is not going to go that way as much, obviously, because of the software they don't have. In China, semi-autonomous and self-driving technology is practically a prereq for any car maker. It's hard to think of a car brand in China that isn't making its own foray into above level 3 autonomy, meaning hands-off and eyes-off driving. The only thing holding it back is government regulations, which, is definitely a valid, thing that I've definitely read up on in other EV vehicles. Sorry about this. So BYD talks about it as well. They talk about all that stuff. Now, XPeng drops what's called physical AI. So on its face, this is more of a marketing or tone-setting term for the whole conference rather than a true definition of or new invention. Slogging through the marketing and hype jargon, XPeng's focus on physical AI, a term we're hearing more and more, refers to how artificial intelligence can and will interact and move throughout the real world and physical space. Okay, again, robotics, Optimus, that kind of stuff. XPeng sees physical AI as the manifestation of its large data models making sense of the world. The founder and CEO of XPeng, He Xiaopeng, wants the self-driving tech to have similar reasoning and response to that of a human and less like a machine. Very, very nice. Now, add in the fact that the car or robot has to navigate a world that is changing in real time. It's a unique challenge for an AI model, especially compared to other models that don't have to deal with changing information in real time. Your brain does it all the time, so it deserves more credit than you think. So getting to this idea here of, they're dropping these, they want to drop all the software in. They do have some, data that actually works here. They actually have run it. XPeng offered several ride-alongs in its entry-level Tesla Model 3 fighter, the Mona MO3 Max, as well as the latest P7 sports sedan. We got some point-to-point, semi-autonomous level 2-ish urban navigation, meaning our eyes were on the road and our hands were still on the wheel. So it still is there, but again, not as good as what Tesla software is. And that's kind of what's putting Tesla above a lot of EV makers is that software. And they're branching out into, the Optimus, into robotaxi and all that kind of stuff, which is very much cool as well. So they talk about, more of the maneuvering and stuff. The big problem that we're going to be talking about here is that they want to go global and how they're going to be able to do it. Now, with this idea of XPeng here, okay, taking a look at their financials compared to Tesla, okay, so we brought up its financials here. This is Tesla on the left, this is XPeng on the right, just to kind of show you guys an overall comparison and to kind of break down this idea. All right, so one key thing that stands out right away between Tesla and XPeng is Tesla has a positive profit margin of 5.31%. XPeng is negative 4.04%. So XPeng as a company, as you will look at the numbers, XPeng is not profitable yet. They're getting there, but they're not profitable just yet. If we take a look, again, at their, this is quarterly here. Let's take a look here. So the market cap has been kind of, somewhat the same over the last couple of quarters. They don't have a trailing PE. They don't have the price to book. They don't have a lot of data here. They have to get the super fancy version of it, but we'll look at the numbers here anyways, doesn't matter. XPeng's not profitable yet as a company. Then that's the huge difference probably as to why people would invest in Tesla more than invest in XPeng, because Tesla is a profitable company and the numbers back it up, right? 5.31% profit margin, operating margin is 6.63% trailing 12 months, whereas XPeng is negative 4.4% here, and negative 3.32% trailing 12 months. Return on assets, negative 3% compared to Tesla's 2.35. Return on equity, 6.79% positive, down or negative 9.2%. So again, profitable, not profitable. Huge difference. But here's what's actually pretty interesting, okay? If you think about the market cap here, Tesla's a $1 trillion company. XPeng is only a $20 billion company. Only a $20 billion company. So 50 times cheaper in terms of market cap compared to Tesla's 1.3. Actually, more, it's definitely more than that, but I went to just like $1 trillion. If this was become a $1 trillion company, it would have the 50x basically the market cap right now. It's like, okay, cool. So, but looking at the income statements, so look at these incomes here. Revenue, $95 billion, and their revenue, $70 billion. Right? Like taking a look at that, 95 billion versus 70 billion. If this company is trading at 50 times less than market cap of Tesla and their revenue statement trailing 12 months isn't that far behind, that's very, very much impressive. Revenue per share, 29.7, but their revenue is 74.23. Obviously, again, they have as much, they trade at a cheaper valuation. They're trading at a cheaper value here. They trade about like $27, whereas Tesla's over $400 or about $400, right? Very, very interesting there. Gross profit margin, 16 billion and 12 billion for XPeng. Quarterly revenue growth of year over year, 11%, 101%. That's pretty crazy, right? Now, again, their earnings before interest, taxes, all that kind of stuff is positive. Here it's negative. As we know, these are going to be negatives because, again, the money they're bringing in is obviously going to be negative. Their diluted earnings per share is negative, which means they're not profitable, whereas Tesla is positive. So still that is the huge thing that we're looking at here. But total cash, 41.65 billion, 36.42 billion, not too far off. Cash per share, 19.1, 13 or 12.52. Their debts are definitely higher, right? So Tesla has a lot more or a lot less debt compared to XPeng, where XPeng's debt ratio is 57%. Tesla's only 17. So obviously, as a company starts to build more and more, they take on more debt to kind of expand and to hope for the best, which is very much impressive. And their book value per share, $31.48. And right now it's trading at like $26, $27. The book value of Tesla at 300 and something is $24, which is absolutely wild, right? So those are things that's really important. Let's go back to the other, these other, numbers here. Again, there's no PE ratio right now because obviously they are not profitable yet. Their earnings per share, though, is down 0.63. It's a negative 0.63. Whereas you take a look at Tesla's, their PE is super highly valued. 269 is a huge premium you're paying for the stock here. And the earnings per share is, again, positive because they're making money here, right? So very much. Oh, they're actually at $20. Oh, my God. Oh, they've really sold off then, haven't they? Oh, look at that. Yeah, okay. I did not. Yeah, they were up at 27. Now they're back down to $20 a share. And their 1 year target is $28. So you're looking at, almost a 40% upside 1 year. And Tesla's trading at right about what the 1 year target is going to be about for this case here. So if you were to look at these two companies just and say, one of them is obviously profitable, one of them is not profitable, right? XPeng not profitable, Tesla is profitable. That's a huge difference there. But the potential for what I'm seeing with XPeng, right, with their robotics and their cars being affordable, and the chance they could be able to branch out and to hopefully, make do on their promises, which again is a hard feat to come by in and of itself. With a $20 billion market cap, if you wanted to become a $1 trillion industry like Tesla's is already into, you're looking at 50x, which means that these shares would be $1,000 a share unless there's no splits or anything else. I wouldn't say go that crazy, obviously, right now, but even still, like their revenues are pretty close in line. They're just not profitable yet. And the minute that XPeng could find a way to turn profitable overall, I feel like is where the huge, huge factors will be. I don't know if we could see, that's the stock historical data. I don't want to see that. I want to see PE ratios. And let me see if I can find like the historics or earnings per share, not PE ratios. So as you can take a look and see here from the annual perspectives here with their earnings per share, it is slowly decreasing. So that's good. You want to see this like slow decreasing here of this point here, because that means they're starting to hopefully make some money. Taking a look at the quarterlies. These are your quarterlies right here. Again, it was negative 1.4, negative 0.7, negative 0.5, negative 0.4. The minute you start to see this positive turnaround for XPeng, I think you're going to see a huge difference here. And again, here's even just a nice little breakdown here. Their financial performance shows a strong revenue growth of 29.58% and an earnings per share growth of 48%. Indicating robust expansion and profitability improvement. However, profitability metrics like operating margin remain negative, of course, because again, they're not profitable just yet. So that is a huge thing. And again, of course, their free cash flow growth is going down because that means they're taking their cash and putting it into their company, probably into research and development again. So definitely Vince can't keep in mind about here. But if I was to take money right now and you say I could buy XPeng or have to buy Tesla, honestly, I would buy XPeng right now, not financial advice. That's just my 2 cents, because the minute XPeng can become profitable, and again, that's a big if, not when. I don't want to say when. If they can become profitable and they have that flip around and they're starting to print more money and be able to use that money to then, expand without taking on as much debt, that is going to be huge for a company. The robotics is going to take off. Their cars go into other markets. That's going to be huge for XPeng. And trading at $20 a share, if you're brand new to investing, this could be a play for you. So not financial advice, of course. So thank you guys so much for watching today's video. If you did make it this far in the video, make sure you like the video, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. Hope making money in the market in some way, shape, or form. And as always, I will see you guys in the next video.